Yo, yo, yo. We live. Here we go. Here we go. What's up out there in internet land and Facebook and wherever else you're watching us from. But guys, we're back for another episode of Teach Me Tuesday. We got, Gavin and LaShawn Abraham, mortgage professionals. Then you got Mr. Wilmot Berry. I like his introduction, guys. Let's hear it real quick. Wilmot, tell them who you are.
Wilmot Berry, with the Berry Group, brokered by eXp Realty, helping my buyers and sellers reach their real estate dreams and goals.
See? Perfect. And Miss LaShawn, would you like to tell the people who you are?
I wish I had that much like swag to say it like y'all,
Stop
but
Okay.
just LaShawn Abraham here in Summerville, South Carolina. I am the sales manager at our Gill Mortgage branch in Summerville. So I'm happy to be with you guys, and I'm glad to talk about our great topic today. So.
All right. Well, we're going to jump right into it. Guys, it's all about the pandemic. Let me say it again. The pandemic. How did it affect the real estate world? How did it affect the mortgage world? We're going to dive right into it because COVID-19 has been a game changer in so many facets of our lives. But we're here today to talk about how it has temporarily and also maybe permanently have changed the game in regards to, the real estate and the mortgage industry. So I'll tell you what, who wants to kick us off?
I mean, we can kind of just jump right in. I'll just kind of start it off, and then we can kind of do what we do and kind of entertain some, just open discussion. Because Gavin, you're absolutely right. I mean, COVID had such an impact on mortgage, real estate, people's livelihoods. I mean, it had a huge impact on just the way we do things today. Just to start, I mean, if you wanted to buy a house during the pandemic, I mean, Wilmot, you could tell. I mean, it was slim pick. I mean, inventory was already low, but I mean, I'm pretty sure you can tell us more about just how people had to approach it when COVID hit.
So, if I had to say what the market was during that time, one word would describe it as crazy. Okay, that's how the market was. You know, uh, buyers and sellers, it was bananas on both sides.
Bananas.
Bananas, craziness. Buyers had to compete. Like we had to have conversations with buyers. I can talk about this all day, but let me just say this. We had to have conversation with buyers like, hey, when you're going in on a house, and if this is the house you want, we have to go all in, literally. Okay, we literally got to go all in if you really want this home. Okay, but
So you
sometimes,
mean to tell me there wasn't any more? I guess prior to that, there was more of a haggle. You could jump up on a house and say, hey, you know what? I'm gonna offer $1 and see what they
All
come
right,
back
price is right.
Versus now with the pandemic, it brought a new game plan into play.
oh man, it was a game. Like COVID was a game changer. Because buyers were going in thinking it was a year ago, like with the mentality that they could negotiate.
Mhm.
When in actual fact, you were competing against 10 to 15 other offers. Okay, and some of them might have been all cash. So, and let me explain that for the viewers that might not understand the difference. Is, hey, if you got a loan from the bank to bring to a seller that says, hey, we need 30 to 45 days to close, and you competing against someone that says, hey, we got all cash and we can close in 2 to 3 weeks, it's hard to beat that. With
That's so
no,
true. That's
yeah,
so true.
with no appraisal. Some of them went with no appraisal. Someone went with no home inspections or due diligence periods. I mean, pretty much it was so laid out for the sellers during that time. It was a true seller's market. It was a seller's happy land. Let's just put it like that. Yeah.
So
I'm,
I got a question there. So
Yeah.
I wonder, because like my mind thinks about like why, you know what I mean? Like why when I think about COVID-19, just taking
Yeah.
back to, that's like what 2019 going in right into beginning of 2020. Like
Yeah.
so people they start shutting the world down, right? You're confined to your home. But I'm trying to think, like, just me. I mean, we already owned a home during that time period. But what made people, one, have the desire, even like, I guess, more than normal, to be like, let's move, let's go buy a house during kind of like truly the worst time in the year? Like, why do y'all think people were just like, let's just go buy a house during this time?
Well, I mean, Will Mike can speak more towards the clients that he's dealt with, but LaShawn, let's just think about you and I. I mean, we were pretty much happy, I guess, in the home that we were in during the pandemic. But you know what? We started riding around,
We were
trying
bored.
to get up, bored, trying to get out, because you couldn't really go different places. So you were just be in your car riding around, seeing what was going on in the world. And then you start looking like, oh, this is a nice neighborhood or whatever it may be. And you're like, we never brought a brand new home. Let's try this out. Or let's move to this neighborhood. So we didn't have a true driving factor because, we were in the area we wanted to be in already. We had the square footage we needed or wanted, all the good stuff. So, but the opportunity arises and it's like, and you know what else though? What else was good? When the pandemic began, interest rates plummeted like to all-time low.
There you go.
So that's what also was a driving factor. It was like,
so it made it affordable. So I hear boredom, affordability.
Yeah. So it's, man, one of the things I loved in college, and some of y'all might think I'm weird for this, is economics, right?
Oh, yeah, man. Econ.
Yeah, econ, bro. Like, it is life, like supply demand, right? So think about it, right? I remember this vividly when I was literally on my 9-to-5 job selling real estate part-time. Right. So, and my supervisor called me and said, Wilmot, whatever you're doing, go home. Right. This was like March, April, right when the pandemic like hit hard or something. And I was like, okay. I was a insurance adjuster. I was literally about to go on a roof of a house. Right. And he was like, go home. We are now virtually working. Okay. We are working from home from now on. So think about that. When people across the nation had to go to their homes, good thing for you guys, y'all went to a actual house. It's some people that went to an apartment.
That's true.
With their kids, with
Right.
their families, right? So all of them together made them probably realize we need more space. You know what I'm saying? So we need more space. So you got that dynamic that happened, and people are like, man, if this is how it's gonna be, shoot, we need a house. I can't live like this. My kids running through the house and I'm trying to get on a Zoom meeting with my boss, So it's a whole bunch of stuff like that occurred at the same time, along with affordability. Another thing that happened, right? Interest rates, like you said, and people moving home had to work from home. Think about it. When your company says, hey, you can work from home, you don't have to come in. Dog, you know what? I don't have to live in close proximity to work anymore. If I can work from home, y'all still gonna pay me the same. I'm gonna go buy a house somewhere where real estate is more affordable than in the more metropolitan or high density areas. I'm gonna move to the suburbs. I'm gonna move somewhere where real estate is cheaper and I can get more house for my money. So as you can see, I'm excited. But
not.
I see so many things that had occurred during that time to make the demand for real estate rise and rise and rise to the way it became this crazy market that it was. So yeah.
I mean, you really have a good point there. I mean, what I'm hearing you saying is that it was the perfect storm. You know what I mean? I mean, you had the combination of the rates, you can work remotely. You didn't have to be confined to a specific area or space. So a lot of people who either lived up north or on the West Coast or, in the snow or wherever, they were, migrating to more coastal, warmer areas. In Charleston, this whole area, even Orangeburg, Columbia, all of that was kind of like prime location to live because it wasn't as expensive as living in New York or California or something like that. So people like, well, why not? You know what I mean? And so with that being said, we can kind of flip it just a little bit. The impacts it had on the mortgage industry was it was almost somewhat the same, but different in a lot of ways. I mean, the lower rates, caused us to have an influx of loan applications to have to do all at one time. But at the flip of it, what it also did was it also caused a lot more tightening of guidelines. I mean, that was the biggest thing that came out because now you have all these people who are working from home now, right? And so from an underwriting perspective, we're trying to figure out, well, people's, income looks a little different or things like that. So the government started putting a lot of restrictions on how we lend money. And that had a huge impact, I would say, as well.
Mm-hmm. So just
real quick, shout out to my big brother. Just hit me up. That's my big brother right there, Lamont Berry.
Like your blood brother, your real brother?
That's my brother. That's my blood brother. Like 14 year difference in age. So yeah. So all right, you can continue, Gavin. Sorry.
I was just going for we're pretty much about the 10-minute mark or whatever. Just wanted to let people know who are tuning in right now what we're talking about today. Today we're excited because not only has this been the talk of our not century but this decade as far as it comes to the pandemic, what COVID-19 did and how it transformed the real estate industry, the mortgage industry, how it has transformed our lives, how we live, the things that we're able to do, the things that we're not able to do, but strictly to the mortgage industry, and then also with the real estate in mind. And we've already touched on some real good things, but LaShawn, just to piggyback up off what you're talking about, especially when it comes to our industry and how we now it's now caused different regulations and different guidelines, because before the pandemic, it was typically where people work 9 to 5 or you're self-employed, and there really wasn't too many situations where there involved variable income unless you were just working part-time. But the pandemic, what that brought about, because of course we had shutdowns, we had people contracting COVID. Now they're out several weeks from work and they're no longer working 40 hours a week, or businesses now tend to shut down earlier. Because if you realize, one thing I realized, which is probably not a good thing, I noticed that a lot of fast food restaurants and stuff aren't open as late as they used to be.
If you think about it, the whole restaurant hospitality industries, they got hit the hardest during the pandemic. And honestly, because because they're more high touch people in that field, because during COVID you're trying to keep your 6-foot distancing, and when you're trying to serve people food and things like that, it's harder to do. So those industries were hit a lot once that happened.
So again, there were a lot of great positive impacts. Like I said, it made the housing market was booming when COVID hit. We were, like you said, we were at a great place as far as interest rates at that time, and of course, just like economics, supply and demand, as the demand started to rise, and people wanted to buy homes because interest rates are great. Everybody has this new awakening. I need more space. I need to do this, or I need to tap into my equity because now I want to build a pool, because now I can't go. I can't take my kids off to the beach like I want, or visit the water park like we used to. So we need a pool now in our backyard. Do you remember? I don't know if you got kids, bro. You know how bad or how long it took me to find just a blow up pool for us in the backyard when the pandemic hit.
Dude,
bro, I couldn't find it nowhere online. Everybody was charging like $1,000 for a $30 blow up
because it was in demand.
It was hard for us to find bikes, bro.
Oh yeah, same. We were looking for bikes.
We were trying to legit, we was like, hey, yeah, let's ride bikes. Everybody had the same idea,
Right.
couldn't go no
Everybody.
place, right? Couldn't go to the gym. So home gyms and all kind of stuff,
Oh yeah.
started popping up or whatever. So like becoming popular. So I mean, definitely a lot of people try to improve their properties during the
Yep.
pandemic that had properties that like, hey man, we can do it here at the house, So yeah. Another thing that happened, I want to bring this up during the pandemic, because of high demand, right? High demand, increased demand, it caused prices to increase in homes dramatically. Okay. It
Mhm.
was a huge surge. People that bought their homes a year ago or 2 years ago had like 50, $100,000, maybe more in equity at that point because of the high demand in their homes. And on the other side for the buyer, they because of lower interest rates, they could
Yeah.
some of them could still afford the higher prices in
Right.
homes. You see what I'm
Yeah.
saying? So but the thing about it is they paid absorbent amounts for these houses above asking. We had gap gap uh,
Protection.
clauses in there where, hey, if the appraisal didn't come in at the price, hey, the buyer was willing to pay the difference. It was crazy, like
Yeah. I mean, yeah. When you just think about that, like, you
escalation
know,
clause. That's it.
yeah.
And gap.
How we I mean, you wouldn't go to the, well, I mean, unless you really wanted it, but I mean, you really wouldn't go anywhere right now and pay an absorbent amount over what something's worth. But that's just how crazy and what the pandemic did, man, for the housing market,
Yeah,
because everybody wanted a home, and um it was just scarce. I mean, the what was available out on
yeah,
the market, everything was going so quickly, and it was what it was. If you wanted it, you had to pay above asking price, or
yeah.
you had to be willing to sacrifice something to get in where you can fit in.
And I hated it for the buyers
Right.
at times. Let's talk about that side. I kind of hated it for the buyers to a degree because they didn't have time to think
Mm-hmm.
about it. You see what I'm saying? Like if you looked at the house today, you had to make a decision today.
Yeah.
That's how it
And so, I
was.
mean, a lot of time, I don't know if y'all saw that in Orangeburg, had that experience in Orangeburg as well, but a lot of time people were buying houses sight unseen.
Mm.
Yeah, it was bad. It wasn't as bad in Orangeburg as like a Columbia
Mhm.
or Charleston. Orangeburg did have multiple offers situations, but it wasn't like craziness like 30,000, 40,000 above ask price. you
Mm-hmm.
know um yeah.
So
So
let's shift gears just a little bit, just because if anybody's just now tuning in, as we're about to, just hit on a couple more little topics before we wrap up, is that we're definitely trying to get people to understand, 2020, 2021 was just, a completely different time, in
mhm,
our entire history of, this particular real estate mortgage industry. And so
mhm,
what people have gotten stuck is they got used to that time, right? And so now it's kind of like we're back to reality in 2023, and we're
Mm-hmm.
trying to figure out, what is the norm. And so prior to this call, Gavin and I was talking about like, well, what was rates at a normal, at a normal amount. So like when we bought our first home in 2011, and then we turned around and bought another house that had to have been like 2016-ish or 17 maybe. Even at both of those times, our rate for our very first house was maybe right around 4, and then in 2016, 2017, our rate was maybe high threes pushing 4, right? We didn't have these 2 and below type rates, right? Now granted, we are in a different time of year because everything that happened prior to, you know 2022, which was last year, it has went up. I mean, right now, so rates right now are averaging high sixes, in some cases even 7 or more%,
mhm,
right? And
mhm,
so people
mhm.
are trying to wrap their head around like, well, should I just wait it out, right? And because in their mind, they're thinking that we're going to go back to these pandemic record lows. And the reality of the fact is, unfortunately, like that's not going to happen, right?
Mhm.
Because there's so many things that happened during that time, and with different rules, guidelines, and things like that that has went into place, it's truly shifting how a person is eligible to qualify, right? So one of the things that I want to say that happened during the pandemic is people were able to put their mortgages, their car payments, and things like that into a forbearance status, right? And so to them, that was good because they got to, defer their payment. You even can think about student loans. I mean, people haven't made student loan payments in years, right? But
Mm-hmm.
what's going to happen is all these things come to an end. And then the reality is going to sink in when it's now time to make these payments and the negative effect it has when a person is trying to qualify. That's the part I think people just truly needs to know. Yes, sometimes we could take advantage or abuse a little bit the systems that we have out here, but when a person goes to try to apply for a mortgage again, like
Yeah.
today reality, those forbearances and those things like that, they do kind of impact you and how you're able to qualify. So you just have to make sure that you have um, reapplied for different things, get off of those type of programs, because in the mortgage lending world, you have to demonstrate the ability to pay a loan back, right? And if
Mm-hmm.
you're telling someone to forbear my payment or to defer my payment, you're telling them that you can't pay. So
Mm-hmm.
if you can't pay something over here, then a mortgage lender is not going to let you, take out hundreds of thousands of dollars if you're showing that you can't pay back, tens of twenties of thousands of dollars. So
Yeah.
that was one of the major impacts that this COVID-19 has also had on the industry when it came to the ability to repay as well.
Yeah. Yeah. So, I'm gonna tell you what I'm seeing, I guess, currently in the current market right now is I'm seeing a couple things. There isn't as many buyers in the
Mhm.
market, and I think it's a trickle effect from other things,
Because there were
econ.
so many.
hmm A lot of people, were able to buy homes during that time. Not everybody, but a lot of people were. So that has taken away some of the demand right now from that. But I think the interest rates have been a big one.
Mhm.
The affordability of the house, like the same house that you probably could afford, got approved for during the pandemic, you probably wouldn't get approved for it now,
Yeah.
because your buying power has decreased.
So,
So,
because I want to add to that, and I didn't mean to cut you off because
hmm
because I just this idea just popped in my head, right? Because I think about
hmm
what you just said earlier. So earlier we had the perfect storm in a positive way when
yeah,
people bought during the pandemic. We had low rate, we had inventory where you had all this demand, and then you had people who still got to keep their same jobs and work anywhere they wanted to, right?
yeah,
So we
yeah,
had all these eligible buyers, right? The flip of it now in 2023 is you have higher rates,
hmm
very low inventory, very
hmm
low demand. And because a lot of these people who could work anywhere, what else they also started doing? There was, and I don't know the exact percentage, but there was at least a good 10 to 20% increase in self employed buyers during the pandemic. So
wow,
many people, because those PPP loans came out, and so many people said, I'm going to become a business owner. They
You
quit
know
their
what?
jobs and started to capitalize on their skill set. And
hey,
so because of
you're right.
that, so but think about this though, because of that, when you switch your employment, right? You're not eligible to buy right away if you don't already own a house. So that
hmm
is another perfect storm that has now slowed down the market.
That's right. Yeah, I forgot about that part. Like, a lot of
Mhm.
people became entrepreneurs
Right.
in during that time frame. And glory to God, I was able to walk away from my 9 to 5 when I remember asking my boss at the same time, like, hey, I'm really thinking about going full time in this real estate thing. You know what I'm saying? It's going all right, you know. But I'll be honest with you, a lot of them discouraged me to do it. But man, I took a step of faith and I'm glad I did. So, and it's a lot of people, a lot of businesses were born,
Hmm.
pandemic businesses. Woo,
Yeah.
I ain't never heard that one. Pandemic businesses that
Yeah.
were born. out of the pandemic, and I think that goes to show, like, man, there was some people out there with dreams that wanted the opportunity, and this was an opportunity for them to,
Uh,
go ahead and step out on faith.
yeah,
So
man.
yeah, so but
So,
yeah,
oh, go ahead. No, I'm sorry.
no, go ahead, Gavin. I
Yeah,
was
no. So, I mean, I was gonna kind of jump in and just add to that. So, um, I mean, today's market and today what COVID has done for us today and what the pandemic has done as far as today, man. I just think the most exciting part about it was business owners realizing that the transition from brick and mortar to now internet based businesses and people really just being able to dive into work remotely and how that has now um, pushed people to look being able to either move to more desirable places to live. I mean, you have people that decided to just, oh, you know what, I can work remotely. I'm gonna go live in. I always wanted to be in Italy, or I always wanted to go live in Hawaii, or whatever it may be. They left, or they moved to the coast. And I don't no longer have to live in Chicago in the winter months. You know what? I can go live on Myrtle Beach, or I can come to Charleston, where the weather's nice and enjoy. And a
yeah,
lot of people, I mean, that's what I thought that was one of the most amazing things that the pandemic kind of shifted and has had an effect with longevity. I don't see
mm,
that ever changing because that opened up a lot of you know companies' minds and now you don't need everybody in a office space or I mean we still need our people who work in service. I mean we still need you and hospitality and all that good stuff. But for those positions that aren't necessarily dealing in a service manner, in a face to face manner,
yeah.
um, it was a good thing that came out of the pandemic.
Yeah, I'm just to touch bases on what you just said, Gavin, about office spaces. That's something I deal into on the commercial side. So I've noticed like a decrease in demand during the pandemic for office spaces. Okay,
Mm-hmm.
why? Because people were working from home. All right. Now I have seen an increase in that type of investment on the commercial side for office buildings. More people having their own separate offices. In an office building, or more of a flex space. Because guess what? Hey, we work from home now, but guess what? It's sometimes good to get out and go to a different space to maybe do some work. One of the great things I liked about my company, EXP Realty, was that during the pandemic, we really didn't have to alter anything because we were all cloud based anyway. You know,
Mm-hmm.
we didn't have to go into a brick and mortar building to do business. We were able to continue as we were already doing, and it didn't affect us because we were already virtual. So but yeah, man, I just think it changed the game for a lot of different people, a lot of different businesses, and hopefully it made it better for a lot of people. So
I agree. I mean, I think it did because I mean, honestly, based on just what I've seen and just all the clients and things like that we talked to, I truly feel that one of the biggest impact that COVID-19 truly made on this industry in general, it shifted people's mindset and perspective. I mean, when you have something tragic like COVID-19 that happens, you have loved ones may have lost their lives. So
Mm-hmm.
people may have lost their jobs. I mean, people start to, prioritize their quality of life, right? And when people start to prioritize their quality of life, then they're trying to figure out like
So
what's more important to me. Is it more important for me to, be stuck in a brick and mortar building from 9 to 5? Or will I like to work a job that gives me the flexibility to take my laptop and sit on the beach and get my work done? You know what I mean? So there's a lot of different options that I feel like came out of COVID-19. It really shaped people's perspective on, man, I need to make more money because the industry that I worked in got shut down. So let me start this business, right? So
yep,
I think there was a lot of good that came out of it as well. Even though, in some instances for some people, it may have, kind of shaking up some things for them. But I want to say, just all in all, just going forward, people just need to know that 2020 and 2021, that is the past. And today, now that we're in the present, we just have to continue to evolve on, okay, well, what does the new after pandemic world look like, right? What is it going to take for us to buy a house today in 2023?
And LaShawn, we about to end, but I just want to put this plug in for the buyers out there thinking about, hey, should I wait or should I buy now? I will say this to the buyers that are out there, and if you're thinking about waiting or whatever your situation might be, I'm gonna tell you what I'm seeing in the current market. I'm seeing home prices decrease. Okay, I'm seeing them sit on the market a whole lot longer. I'm seeing the sellers being a whole lot more negotiable. Okay, so I want you to understand that, because the reason is because if there's a home out there that you really want, you could possibly get a really good deal on it right now in this market. Okay, and you can get the house you want. And if you are having some kind of feeling about the interest rates, I know LaShawn and Gavin got options for that. And also understand this: once you purchase the home, you can always refinance later if the interest rates drop. Okay. So just something to think about for those buyers out there, that if you're thinking about buying but a little hesitant, guys, hey, there's still opportunity out there for you to own a home.
Yeah, and that's well said. I mean, well said. Is there anything else you want to add to that, Gavin, before we close?
No, I was gonna say I couldn't have said it really any better. Yeah, don't let today's interest rate prevent you from your ultimate goal, because again, I really want people to understand the logic of this. If you don't already own your own home, you are paying 100% interest rate on wherever you're living.
Yeah.
Your interest rate is 100%. So don't look at 6.5% to 7.5% and say that's too high when you're paying 100%. Okay.
Yeah.
So just let that marinate, let that register. I'm glad. Very, very successful Teach Me Tuesday today. Thank you guys for always being here to make sure Teach Me Tuesday goes off without a hitch. And next week, man, we back at it. So if you guys have another topic or anything that you want us to tackle, don't be shy, don't be hesitant. Shoot us a comment. I mean, drop a comment, shoot us an email, all that good stuff. But we're happy to help.
Yep. Until next time, you guys have a great one.
Appreciate it. Appreciate you, EJ.
Yeah. Belchazar. You're gonna hate me for that.